Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Lab.com, and it is time for the recap. Wow. Definitely, I guess every day you have to have plan A, B, and C. Yesterday, plan A, B, and C was, would we, hold 27.10? Would we break below it and stay below it and accelerate down? Or would we break below and get a red dog reversal for some kind of rally attempt? All right, well, plan C happened. Today, plan A, B, and C was, okay, we're down 20 handles. Can we try and go green and have a little commitment to yesterday's reversal? Okay, that actually is the way it started. And then, boom, as we started to get weaker, we broke, I posted some, Fibonacci retracement levels on, yesterday's move to show where if we were any good and we had any commitment to yesterday's reversal, and if it had any validity where we should have held. Well, we didn't hold the 0.38% retracement, we didn't hold the 50% and then the 0.168. So anyway, at that point, I definitely, I made some money, good money yesterday, and then tried to buy a little bit back here and there. I had some paper cuts and get out of the way, and I think it was flat pretty much from 2 o'clock when I tweeted you guys I got out of my options until the close, and I watched the spiders go from 270 down to 265. So with that said, not the easiest environment, but you have to be very, very careful. We've been going up for 9 years. We've only been going down for a month. It could last longer. Who knows? Today could have been the bottom. I don't know. All I know is that it's very dangerous when stocks have a reversal bar yesterday and they engulf it and then go down a heck of a lot more the day after. And a lot of stocks did that. Facebook had a little bounce yesterday and then engulfed it and boom, boom. Netflix was the strongest stock yesterday, went green first. And today opened up down 5, went green, and then went down, 5, 10, 15, 20, even more than that. So you have to respect if things don't hold where they should to give a day meaning or the prior day meaning, you get out of the way. Okay, and then you have to respect the bigger trend, which all these things are below their 8, 21-day, 15, and now some 200-day where, most rallies were meant to be sold. Not every one of them is going to reclaim levels and have continuation. Buying ugly and playing red dog reversals can make you money, but if you stay too long, you're going to get, you're going to get hurt. So anyway, here is the S&P cash, and this was your 27.10 that we reversed on yesterday, and then now broke that this morning, and then broke this and closed even lower than this. I don't have the data of the end of the day, but it is what it is. Okay, this I guess was much more of a bear-looking flag than what could have been a W that got taken out, and now we see what happens tomorrow. All in all, though, you guys should have and must have been in some kind of portfolio, from portfolio to a tactical approach when we broke the 8 and 21 day. Okay, I was in, I think, 8 to 15 positions for the majority of the summer as we rode it, and even the majority of this, and then finally, boom, out of the way. The same way we're out of the way here. I remember being in a nice portfolio approach above the 8 day, having a great time, high-fiving with new highs, this, that, and then you had this gap that never got filled, and then was out of the way here and didn't have to go through this mess. So anyway, we'll see what happens now, but all in all, you don't have to be perfect. I'm not going to say I'm at the highs of my year here. I actually, I've had a pretty frustrating October. I'm probably down, a decent amount, but from what I've made for the year, it's not. And it's definitely recoverable. But if I would have kept the same mantra and composure, I could have given back everything and then some, and who knows. So hopefully that's helped. If you look at the spiders, I talked about the retracement rules before, okay, and it was good to know. The retracement rules work, okay, from here to, from where was it? From here to here, okay, that was, that's what we were looking at, okay. So if you go to this candlestick, really the first 25, if it was really strong, that's what it would have held. And then the 0.382 was 272.53, so really in a very strong tape, that would have held, okay. And then you had, whatever this was, the 50 was just probably about where I got stopped out of, around 271.08, and then right when it broke 271, that means there was absolutely no commitment to yesterday's reversal, and that we could at least test this, let alone go down even further. So that's when you use Fibonacci retracements. You could have used them on everything. It could have helped you across the board. Let's go to the Netflix, because some people got hurt in Netflix. Okay, it's hard to see this coming. Okay, what did we do yesterday? We took back the 200-day, I mean the prior low, boom, we had a nice rally. And then today everyone's like, oh, I think Netflix is going to continue maybe to here. And I thought, hey, maybe it could. You know, if it holds a majority of this candle to give this candle validity versus the downtrend, okay, and once this broke, okay, really 327, basically said, hey, we're not holding the top third of this candlestick, there's no commitment, get out of the way. You could have even waited and it would have hurt, or tried the 0.6168 at 3 1/4, and you still would have saved yourself 24 points to the downside. Okay, candlesticks like this need commitment in order to stay with it, especially when you're below the 8 and the 21-day and all of these. Okay, that's why, you know, you have to be very careful and nimble. Okay, here, look, this was a reversal candle, and what did it do here? Okay, it, you know, whatever it did here, you can't really see it because whatever, but you can see with your eyes, it wound up holding the top third of this, and then it continued. Okay, so anyway, you have to be careful like that. I was long Apple this today, and I said, can Apple hold 223? Okay, because that would have meant the market was strong. That would have meant, hey, maybe the active bulls are taking back over. What did it do? It went to 224.23, actually sold some strength, got stopped out at 223-ish, and look at this moved lower. I don't know if it's a short. Last time I tried shorting it, I think I tried shorting it on this day, and I got a little hurt. Some guys like, hey, you know, Apple, how's it going to, you know, hold up? Look at the size of this candle. I'm short tonight. I said, okay, well, you have Microsoft, AMD, and, you know, some big ones tomorrow, so take care. But anyway, you know, this could be vulnerable. I think Microsoft's up, so it's probably up a little bit, you know. But anyway, it's been very hard. This has been very hard, very hard. Here looked okay, down move. Here looked okay, nothing. Back down to the lows. Here looked, you know, like it's going to fail, back to the highs. Yesterday was the strongest thing out there. You know, matched the exact opposite. That's hard. Amazon has earnings tomorrow, so we'll see. All in all, you know, some guys were talking about this. I know Chart Guy was talking about this being a bear flag, that I had to see the 200-day. Well, it didn't. When did it break its trend and change and go from being special, like I love when, you know, when Amazon's special, right here when I lost the 8 and 21-day. And then look at it. It's been low this ever since. If you guys are good shorts, which I am not, you know, you should, hopefully you killed it. I had a great year, great 3 quarters, riding the 8 and the 21-day, playing great breakouts all the way to highs. You know, now little paper cuts here and there, but I'm not caught in this mess. Same thing with Facebook. Actually, Facebook, I don't think I've, you know, really been caught in it or trading in it. Like, this is when it's beautiful. This is when it's bearish. If you're a bearish short trader, hopefully you're making a lot of money. If you like to buy it in the hole, you know, you had a few. This was one of them, and then, you know, I bought the options and just got out of it because this happened. That's pretty darn ugly. Look at that. Wow. Some macro levels breaking here. I don't know let's see what Microsoft's doing after hours, just so, you know, you can see a little bit more. Microsoft is up 370. Tesla up 27. Okay, so the market's going to gap up tomorrow, and if you went out short, you're going to be hurt. If you didn't go out long and you got stepped out today, you'll be upset probably. Yeah. Spiders are up $1, 266.30. Anyhow, I wonder if Musk called Andrew Left and said, hey, we're going to crush it. Let's get on the same team. But anyway, this is resistance. If you're trading Tesla after hours, look to see how it handles 305. Can't get above it, then it's a fade. If it gets above it, who knows? What else? It's just very hard. You know, JP Morgan, what did it do today? You know, just another lower low. It's not below 102, but, you know, this is also kind of like, wow, this thing has had a big move. It's just getting down to macro support. Okay, this has been a big channel. Yes, kind of bounce from here, maybe, but if you go to the weekly chart, you know, if these things want to go down lower, this can go lower if it wants to, but we'll see. This was when it broke the momentum trend. Now it's testing bigger support. We'll see what happens there. BAC, look at that. It already broke this area, and I guess it's on its way to here, or maybe even down to here. But this was your upper support that broke. Big little pennant that resolved to the downside, but we'll see what happens next. You know, the IWM, you know, little clues here and there, right? Boys and girls, look at that. This is when the accelerated trend broke. This is when it had a false breakout. This is when this actual, resistance that could have been support wasn't. And now I guess this could be your next spot. We'll see. We'll see what happens tomorrow. Probably going to be up tomorrow with some of these earnings, but we'll see. But all in all, lots of clues. Lots of clues. Here's your 21-day. Look how it's been below it this entire time. Actually, the 8-day. Jesus. Here it's above it. You could have been a buyer. Here in 21-day held above it again. And then all of a sudden things really changed here, and they changed fast. XLE also changed very fast. My goodness gracious. Engulfing bars have to be honored. Look at the size of this engulfing bar. It looked great. Yes, oh, it looks like it's going to break new highs. Value. Everyone loves value, value, value. And then this candlestick should have gotten anyone out of there long if they were trying to play it for a tradable rally while it's above the 21-day. Well, boom, gone. Then follow through. And then just like I said with JP Morgan, here was macro support. It should have held. It didn't. Okay, now who knows? Maybe we get a red dog reversal tomorrow. We'll see. But all in all, you have to respect price and you have to respect risk. A, B, and C plan every single day. You have to be prepared enough and be up early enough so this way you could execute when things happen. Yesterday was a great day, and today hopefully you didn't give back the entire day trying to be long testing levels or give it all of yesterday back and then some. I actually gave back a little bit more than I should have, just because my opinion was we were going to hold and we didn't. But I didn't get stubborn. It could have been horrendous. Even if you had been out of tactical mode or out of portfolio approach like me, still testing levels and trying to do the red dog reversal and trying to pick spots has not been great. Shorting into the 8-day and the 21-day has been working much better. If that's what you do. Short the H cell setup. Shorting into a bounce and then adding to it when it breaks a low. You could have done that, I guess today, right? It bounced, you could have shorted into resistance, and then when it rolled over, added on yesterday's low, and then you got paid at the bottom end of the H. A lot of stocks did the same thing there too. Any which way you do it, you got to pick and choose, and you have to also trade what's conducive to your strengths. And also work on what you're not strong or not good at, because stocks go up and down, so you don't want to not be involved in half of the action. But if that's the way it is, that's the way it is. Cash is a position when you're not seeing it and it's not conducive to your strengths. But as you go through time, you get more and more strengths. With that said, we'll see what happens tomorrow. Pretty ugly day today. Some of the stocks are up after hours. We'll see what happens overseas. And again, I would just leave the FOMO on the side and see what happens next. I'll see you in the morning. I definitely went out flat, and we'll see if we gap up to be sold or gap up and hold. And was today the day that finally capitulation happened? I don't know. We shall see. All in all, though, not the easiest of trades. So if you've lost a little, okay. If you lost a lot, making mistakes, know what those mistakes are so you could start to work on them. And there's been a very fine line between losing a little and losing a lot, or making a little and making a lot. So make sure that fine line goes from being like a pen to maybe a marker for you. Trying to do it for me too. I'll see you in the morning. Have a good night. Bye-bye.